Welcome everyone, and for those that have just joined, my name is Phoebe Tucker. I am a Nature Associate at the Green Finance Institute, and for today's Lunch and Learn webinar, we're going to be exploring governance and how to develop governance structures for your nature-based projects that use private finance. Just a bit of housekeeping before we begin. This session is being recorded and we will be posting it on the GFI's Investment Readiness Toolkit and our YouTube channel, where you can find the series of webinars we've run on the Investment Readiness Toolkit journey. And we'll be taking questions later on for all our panelists, but please do feel free to submit your questions as we go along in the chat or in the Q&A function. And when we get to the Q&A, you can also raise your hand to speak directly. So with that, I think we'll get started. The topic of governance is rather an intangible one, and it covers a lot of different aspects of your project, such as the decision-making capacities of the individuals involved in your project, performance reporting, risk management and rewards, choice of legal entity structure, and general stakeholder management, actually. So a lot of different aspects that cover how your project can deliver its environmental outcomes and also its social and financial outcomes. So while this milestone is listed as number 6 in the Investment Readiness Toolkit, a lot of you, I'm sure, will agree that you're fundamentally working towards building your governance structure as your project develops. And so to explore this topic, we've got a great range of speakers lined up for today. We have Chris Avent, who is Green Estate Manager at Plymouth City Council, Digby Sowerby, who is Operations Officer at the Natural Capital Advisory, which is supporting the Environmental Farmers Group. And we also have Jack Spees, who is Chief Executive Officer of the Ribble Rivers Trust. And before I hand over to our first panelist, I'll just mention briefly the recent survey that the NERF Community of Practice circulated, asking for feedback on how the COP supports the NERF applicants and your projects. So in the spirit of continuous improvement, I will say that the GFI is also very much open to taking feedback on how these webinars are delivered. And so please feel free to drop me an email or the GFI Hive an email with thoughts on how we can improve these, because we really want to make these webinars fit for purpose and useful for everyone here. And so with that, I will hand over to our first panelist, Chris. Thank you so much for joining us today.
Thank you, Phoebe. Yeah, hello everybody. As Phoebe said, I'm Chris Avent. I'm the Green Estate Manager at Plymouth City Council, and yeah, I've been working the last couple of years on kind of our green finance strand of work at Plymouth, along with a range of partners. So I've just got a few slides to run through. Now I've got to choose the right one, so that'll be that one. Okay, so I hope that's popped up. So I'm just going to run through, give a quick overview of our project in Plymouth, and then kind of lead into sort of maybe a bit more kind of intimate detail on kind of some of the governance aspects of the project and how we've worked through those over the last 18 months. So in Plymouth City Council, we're working on sort of strands of green finance work for a couple of years now through our Future Parks Accelerator program and then through our NERF program as well. So just to quickly take back sort of a few backward steps in terms of where we started. And so the first sort of element of work we've worked on is kind of looking citywide across different elements of green finance. So backstory of just kind of looking citywide and where we've got opportunities and kind of looking to rank and assess where those the greatest opportunities lay. We carried out a full kind of feasibility opportunities assessment across the city. You see there in the middle there, habitat banking was kind of one of those strands which we picked up kind of through that assessment. And we worked that through using like quite a lot of data sets which we hold to kind of look at where our greatest opportunities lay. Loads of them, as you can imagine, but particularly yeah, habitat banking being the focus which we picked up and ran with, taking advantage of the biodiversity net gain provision. But one thing that came out of this early stage of work, which does relate to the governance kind of aspect, which I'll come back to in a few minutes, is around how we struck. One of the key things of thinking at a really early stage was around how we structure our kind of green finance setup particularly from a local authority perspective, which kind of gives us the opportunity to drive forward kind of these multiple opportunities which we saw on the horizon. So I'll reference the Ocean City Fund, which is kind of an umbrella entity which we picked up at an early stage, which could facilitate the driving this area of work forward. And in early stages, we kind of identified, as you can see here, the Ocean City Fund sitting kind of right at the heart of the work which you may do to deliver habitat banking, carbon trading, renewable energy, enterprise around our national marine park, and other opportunities which were identified. And this was really, really key to kind of taking forward the aspirations that we had. So I'll come back onto how that's fitted into our kind of structuring our governance on our habitat bank specifically in due course. So the big vision around having a replicable, scalable funding ecosystem for investment in green and blue assets and sustainable enterprises within them, and delivering those kind of multiple ecosystem services was kind of where we stood and where we set out our kind of work. So, as I said, we sort of did that initial work, and then starting just over 12 months ago, we then focused in on our habitat banking, development of our habitat banking vehicle. As a local authority, kind of quite a novel idea, quite a novel approach to kind of thinking about how we look forward to and take advantage of the opportunities and de-risk as well, things coming down the road from implementation of biodiversity net gain across the country. So we had experience of delivering biodiversity net gain projects in Plymouth. Prior to this, we've had biodiversity net gain in our policy since 2019. So the concept wasn't unfamiliar, and that's quite a key point, kind of which I share, is that kind of the concept of biodiversity net gain was not completely new to particularly some of our sort of more senior decision makers in the council. So we knew we had a really good idea of what we kind of needed to develop. So areas of work which we developed to build our habitat bank proposal very much looked at developing our data sets, looking at supply and demand assessments, using Deframetrics, UK Hive surveys to inform that, and then building up a really strong costed model around how we were going to deliver a habitat bank in the city. We wanted to make it really good, really high standard, so we worked with a range of stakeholders to develop our gold standard principles. And then we took on board an awful lot of work then with our partners, Finance Earth, giving us kind of really, really astute financial advice, but also appointed Freeds to work with us as giving us external legal advice on how we look at the kind of the nuts and bolts of how we're going to kind of build a habitat bank, which is going to be deliverable kind of in the context of a local authority. So I think the real kind of the key thing to focus on here is the work which we've been doing probably since I'd say this time last year, so last summer, sort of June, July, where we started the work of engaging with internal stakeholders in PCC and kind of educating them, advocating for the kind of approach that we needed to take. And I think, as Phoebe referenced kind of earlier, kind of governance is can be a relatively kind of nebulous kind of concept sometimes. So I think probably to think about the way that I frame this is probably two aspects which you've had to work on. There's the governance around understanding our existing governance from a local authority perspective. How can we get the decision made to enable us to set up a habitat bank? The piece within the local authority context, and then secondly, the second part is how do we set up a governance framework or structure which gives us a viable model to deliver against. So they're the two kind of main parts which I'll kind of want to talk about a little bit more. So on the first bit, as you can see there at the bottom of the slide, we're kind of, where are we now? We've got a decision to be made. We are setting up a habitat bank in Plymouth at arm's length to PCC, so I'll kind of go back to kind of how do we get there? How do we work with people within the local authority to get to that decision point? So the options analysis was the really key aspect of this. So the work which we set out initially, so two parts, was looking at broadly the four options which were available to us. We had the do nothing approach, which we presented to our kind of senior decision makers through third-party delivery of biodiversity net gain through existing or third-party habitat banks. We could deliver it in-house, or we could deliver at arm's length to PCC. They're the four options which we looked at in detail and presented some of the financial elements, some of the cost-benefit analysis effectively of what that was going to deliver for PCC. So the So if you can hear that, I'm not at the cricket, if anyone's wondering. It's just our little snack vans just arrived outside. So apologies, that's kind of filtering through. Yeah, option 4, that was our kind of, arm's length. That was kind of the option which we have taken forward. And I think this, just to put in the context of, I think it's a really good slide to illustrate, actually, real key was, how did we inform people around what biodiversity net gain is and how is it going to be delivered? So this slide was really important in terms of just showing the kind of flow of external investment coming into a habitat bank, delivering biodiversity net gain on site, providing then a tradable commodity which we're trading with developers, other buyers, bringing the revenue streams back into the habitat bank, repaying investors. Having kind of graphics and illustrations like this to inform people about the concept was really, really critical. So one really key learning is just, understanding what your offer is and talking people through. So that involved an awful lot of work for us with our finance and a range of finance people, legal teams, our corporate management team, and also members as well, councillors, importantly, kind of bringing them along with the journey with us and talking to them about why we needed to do this, both from the benefits point of view, about attracting external investment into the local authority, into our green spaces, but also sort of de-risking us in terms of how we deliver that as a local authority, where we've also got a local planning authority role as well, and trying to sort of sift out kind of where our roles and responsibilities lay. So lots of work around that, which we took forward. Then in terms of the second part, how do we set something up which is workable for a local authority? Going back to the slide I showed you earlier about the Ocean City Fund, the concept of having a kind of a high-level umbrella organisation. So we landed on the fact that actually, even just delivering a habitat bank at arm's length to a local authority alone, we would still want a two-tiered structure. We want a holdco, so a company limited by guarantee, 100% owned by Plymouth City Council, and then beneath that, an operational vehicle, so a company limited by shares, which is wholly owned by the holdco, which then delivers and brings in the investment and delivers the habitat banking function. You may well be able to sort of see this as well. If you imagine attaching other sub-funds, for example, a second stage habitat banking vehicle onto there, coming out the bottom, or any other sub-fund, any other green finance strand, they can all sit underneath that holdco. So we're also kind of developing the kind of that bigger picture Ocean City Fund structure in setting up a habitat bank. So key learning is at this stage, just to share, I think that options analysis was critically important, really, really important to kind of familiarise people with the concept and bringing people along on that journey to understand why we want to take this forward, both from an opportunities and risk perspective. We learned an awful lot around understanding the context of your local authority, and particularly the family of companies was really, really important. So because there was different local authorities will have different kind of either appetite or non-appetite for setting up new vehicles, new companies to them. So that's really, really important to have those discussions early on. As with anything like this, which we're kind of like, doing new stuff, breaking new ground, it's never a stupid question. Building understanding along the way is really, really important in terms of how you develop that. And I think incorporating others into the discussions has been really, really important part of learning for us. People who are completely unfamiliar with what biodiversity net gain and what it's all about takes an awful lot of time, not to be underestimated. So in summary, we're really confident now. We're just in the process of setting up those companies, and we're really confident that there's a really good market out there for us, and we're going to be able to attract that investment to kind of get our habitat bank underway. We're looking at kind of becoming operational kind of Q3, kind of towards the end of this calendar year. Our initial piece of work is focused around 3 pilot sites, which are 109 hectares in total, 3 Plymouth City Council owned green spaces. I think we've still got recognition of the opportunities and risks that are here. It's a really nascent market, obviously, and how we're going to kind of deliver against that. I think the kind of there's going to be an awful lot of development of our governance. We've started small, and we're going to grow it as we kind of build, but we're starting small to make sure we kind of deliver effectively in the first instance. Clearly benefits here from a council perspective, which we can deliver, and obviously deliver against sort of strategic commitments around the local nature recovery strategy as those elements as those come forward locally, but also kind of from a bigger national picture, kind of keeping an eye on those policy positions is going to be critical as well. So I will stop there because there was a quick blast through kind of where we've got to, and there'll be some Q&A at the end as well. So yeah, hopefully it's given a bit of an insight into the work we've been doing in Plymouth and some of the lessons learned and some of the ways we're taking things forward.
Yeah, brilliant. Thank you so much, Chris. That was amazing. You guys have done such great work on governance, and it's great how the journey that you've set out has given such valuable output and learnings. But I'm wondering, within this journey, because you set it out so succinctly, what was actually the part that took the longest or was the most labour intensive in terms of solving?
I mean, difficult to quantify. I think in terms of like time spent, I mean, we've invested quite a bit in kind of the data build up, building in the background, building up kind of the site information, the survey efforts, kind of building that into a kind of financial model. I suppose I haven't kind of quite been directly involved in that, so I kind of will say that was definitely a piece of work and something you need to resource quite well and commit to. But I think in terms of then also the big time commitment from a governance point of view is really very much around kind of the familiarization and kind of bringing people along, educating people. So as I said, kind of in our finance teams, in our legal teams, and understanding how a kind of habitat bank and that concept kind of plugs into local authorities, particularly when given the context the local authorities generally are in. It's the why, isn't it? Why would we do this? And making sure people understand, as I said, kind of the opportunities that are there, but also some of the risks which we're trying to cover off by doing this. That was being there's a really broad spectrum of people you need to convince and bring along on that journey. So that's taken an awful lot of time.
Yeah, brilliant. And in terms of stakeholder engagement on this journey, as you say, bringing people along, were there others out of interest outside of Plymouth City Council that you engaged with, other than Finance Earth, who provided advice, but were there stakeholders within the community that you needed to educate, as you say, and bring along on this journey?
I don't think there's been other stakeholders which from external to PC we've kind of needed to bring along in per se in terms of sort of convincing them that it's a kind of valid approach and the right thing to be taken forward. But we've definitely used partners in our Future Parks project who've been a huge support in terms of kind of the advocacy and supporting what we're doing and kind of backing us. That's been really vital to the success of kind of getting to where we've got to. We're not just kind of a kind of like most of the local authorities, a few of us kind of delivering kind of green space kind of work, kind of green estate managers. Kind of having other people kind of flying the flag and backing what you're saying is critically important to kind of convincing others, particularly at a senior level, that what we're doing isn't sort of just has really clear and strong objectives, is supported from a kind of broader perspective than just our local level.
Brilliant. Yeah, no, I'm so glad you mentioned Future Parks Accelerator, because they do great work. And I can post a link to the chat actually of their resources, because they do provide a lot with a public view. So yeah, fantastic. Thank you so much, Chris. Moving on then to our next speaker, we've got Digby Sowerby. How are you doing, Digby?
Very well, thank you, Phoebe. And I'll be better once I get this working properly. Is that working all right for you guys?
Perfect.
Fantastic. Brilliant. So I'll crack on. So essentially, I'm Digby Sowerby. I'm Operations Officer at an organisation called Natural Capital Advisory, and we provide all the services for the Environmental Farmers Group. And I'll run through how all that fits together in the presentation. I'll essentially give you a background to the Environmental Farmers Group and how we've progressed, as well as then going on to the governance structure. So why was Environmental Farmers Group set up? So the Game and Wildlife Conservation Trust down in the south of England in the Hampshire Avon catchment had set up cluster farms over the past sort of 10-15 years, and these have evolved quite largely across the UK now. So I think it's over 140 across the UK, but there's a real concentration in the Hampshire Avon. So 60,000 hectares out of 140,000 hectares within the Hampshire Avon is within farm clusters. And so Teresa Dent, who's the chief exec of the GWCT, came together with some of the cluster leads to say there must be something bigger that we can create here and create some sort of environmental change at a larger scale. And this was in the context of farmers losing large amounts of money from BPS. So at the moment, farmers get paid, I think it's about £250 per hectare, just a flat rate from government for over their land. And so farmers are going to be losing this over the next 4 or 5 years. And we equated that to about £37 million lost within the Hampshire Avon catchment alone on an annual basis. So it's a large amount of money that the agricultural sector is going to have to find to be able to make up. And so that sort of came together with this idea of a supercluster concept, and we decided that there needs to be a new financial model in the rural sphere for farmers, and that's where the Environmental Farmers Group came together. So the EFG has got two main elements to it. Firstly, it's to be able to deliver environmental change at scale. So it's environmental change that can be coordinated, monitored, tracked and reported on. But at the same time, also making sure that farmers earn fair reward for delivering those environmental services. So it's ensuring that this new income stream associated with the environment provides profitable returns for farmers so that it can firstly engage them in delivering those environmental outcomes, but also can replace the funding they've lost through other means and the loss of government subsidy. And there's three main focuses for the Environmental Farmers Group. So that is biodiversity and species recovery, clean water, and then carbon net zero by 2040, all quite broad. In terms of how EFG has grown over the past year, so we now have 109 paying members covering 44,000 hectares, mainly focused in the Hampshire Avon and neighbouring water catchments. And we have further, it's much larger than that now, over 100 expressions of interest covering over 50,000 hectares across the UK. In terms of how we have built the group up, is we're separating farmers into equalisation cells. These equalisation cells are based on water catchment areas. So you can see here in the map, you've got the Hampshire Avon catchment in red, Testenitchen in blue, and then the Dorset Stour in yellow. And we are looking at setting up further equalisation cells across the country. So I think we're speaking to about 7 at the moment. Natural Capital Advisory has also set up 2 other farmer groups. So there's one called Peakland Environmental Farmers and another called Swaledale and Wensleydale Environmental Farmers. And these are looking at mimicking the Environmental Farmers Group model. But of course, because of the differences in the farming nature of upland farming, they're going to have slightly different arrangements within that model. In terms of the membership model, what do members sign up to when they join the EFG? So every farmer member will pay £1.25 per hectare subscription. That helps us fund me, essentially, and some of the work that we do within the Environmental Farmers Group. Secondly, we have an equalisation policy. So that means that when a farmer trades, so when a farmer has natural capital trade, whether that's biodiversity net gain, nutrients, carbon, etc., 88% of the value of that trade is returned to the member provider. 9% is distributed between all the other EFG members within that equalisation cell, going back to those equalisation cells there, on a per hectare basis. And then 3% is returned to the Central Environmental Farmers Group for administration and research and development. And I'll come on to that in a second. The 2 purposes for that are firstly, that it rewards members for the buying power they've given. So a farmer can achieve a greater price on the profit on the product they are selling, big thanks to other farmers who've joined in around them to deliver that environmental change. And secondly, it's to a nod to this loss of BPS. So it's recognising that farmers won't all trade on day one. There'll be a few lucky farmers who do very well. And it's making sure that this is looking at support of the entire farming and rural community in their specific area. A requirement of members is to trade through the EFG. So they have to do all their trading through the Environmental Farmers Group. Of course, that's key to the cooperative model, because without those farmers trading through that group, we suddenly lose all the benefits of trading as a group. We have a trade allocation policy. So essentially, if a member is approached by someone who wants to trade, they get first right to that trade. And equally, if a trade is, if someone approaches the Environmental Farmers Group for a trade, that is distributed to members as appropriate following some guidance that we've put in place. And then we also have a fair exit arrangement. So farmers can get out of the cooperative very quickly, but also not too quick so that they can run off with a trade essentially and subvert the group. So in terms of the governance structure, there are 3 main layers. Firstly, we have a board of directors of the Environmental Farmers Group. These are predominantly farmers, and they help set the group up from the start. So they've been meeting now for over 2 years, pretty much every week, and sitting and volunteering their time. So they're all volunteering their time on that. And their main responsibility is to decide on where the company goes and which direction it takes. So it'll provide the direction for the group. Secondly, we have Natural Capital Advisory, so who I work for. Now, Natural Capital Advisory is contracted by the Environmental Farmers Group to provide all the administration services, advice to farmers, brokering services, etc. So we handle all the day-to-day management of the group. And Environmental Farmers Group doesn't actually employ anyone directly themselves. They contract through us. And so we advise farmers, for example, on the risk of different options and whether they're getting a good price or a bad price, etc. And then the third layer, of course, is the farmers themselves. So farmers ultimately in this model retain complete control. So farmers decide whether they want to put their land in or not put their land in. They get to choose which opportunities they want to pursue and which they don't want to pursue. And that's really key for us as a farmer-led organisation, that they have the autonomy to choose as they wish. In terms of the other sort of key features in regard to governance, so we've set up as a limited company. We decided that limited company was the simplest model for setting up. Firstly, it means that we are able to redistribute any additional income that we gather. So as I mentioned before, the EFG can get money through 3% commission on trades. So that might in time provide too much for the Environmental Farmers Group. And so we wanted a mechanism to be able to redistribute that amongst our members in that scenario. And so limited company was very much the model we chose. We have regular board meetings. So like I said, they're actually meeting fortnightly now, and then members as well. So individual members, we have a members meeting every quarter. So we usually get about 90 farmers coming to those members meetings on a quarterly basis. We have an online portal for members so they can access all the relevant decisions the board has made, and also all the industry knowledge that we've gathered over the past year. And then finally, we work very closely with local agents and suppliers, because a key part of our ethos is that we want to deliver that value back into those rural communities and those rural supply chains. So it's making sure those people who've built their businesses are not being disadvantaged by our operations. And that pretty much concludes all I have to talk about. Thank you. And I'll stop sharing.
Brilliant. Thank you so much, Digby. Yeah, such an interesting model, and I think really relevant with the focus on farmers for delivering natural capital at scale. I think it's really, really relevant, especially this concept of working as a cluster and sharing rewards, especially, I think is very interesting. So you have those numbers up on your slide of 88% to the actual farmer delivering, and then 9% to others in the cell. Could you talk about how you settled on that exact split, or what kind of decisions, how farmers felt about the split, and how that was communicated, just that journey and getting that split right?
It's a very difficult one, because of course, when you say to a farmer you're only going to keep 88% of your trade, they're not generally always very happy about it. But I think when you go into more depth, and what we've found with all the people who've signed up, and most of the people who sign expressions of interest, is that they recognise that there is greater value in working with others on delivering a higher price. And also for many farmers, they don't have the time to work on a whole new sector. So they need to, they're sort of dedicating their finance through the £1.25 per hectare subscription to us, to essentially dedicate our time to doing that, acting on their behalf. And in regards to how that figure came about, so like I mentioned, it's essentially those two elements are key for us. So it's firstly replacing that lost income that was coming through on an annual basis, and then secondly rewarding people for the size of the group that they've created. So I think we found that 8893 was about right for this group. But yeah.
Brilliant. No, that's really, really helpful. And you mentioned with the Peakland Farmers Group that's just been set up, and I posted the link in the chat for anyone looking to learn more about them. But you said that the governance structure of each cluster, of each group, will depend on the lay of the land. So can you give me a couple of examples of how the Peakland Environmental Farmers Group will differ from the original EFG?
So it's a really interesting thing. So we're looking at the model at the moment. So they are incorporated, but for example, in upland farming, you have a lot of large moorland owners, for example, but then lots of in-by farmers operating in small areas of land. So you then look at how do people contribute into the group if they've got those two levels. So is it on a per hectare basis, or is it done through a sort of a minimum level or a maximum if you're a smaller farmer, for example? So at the moment we're looking at maybe the upland farmers on the smaller farms will just have a fixed £10 a year fee or something like that. And then everyone else over a certain hectarage will be on a per hectare basis. And we're also looking at how much is redistributed. So maybe 90% goes back to the member provider, and then 7 and 3, again, because of the structure of that area in those areas.
Brilliant. And I think that matches up what Chris was previously talking about knowing your area and understanding the history and how stakeholders work together generally. So yeah, no, exactly. Really great. Thank you so much for that presentation. Moving on to Jack, our final panelist, to talk about cooperative structures. Hi Jack, how are you doing?
I'm good, thanks. How are you?
Very good.
Just put my screen shared. Hopefully that's come through okay.
Cool. Yes, perfect.
Okay, brilliant. Yeah, so I just wanted to talk about our experiences in developing a cooperative structure in Lancashire and a little bit into Yorkshire, but don't tell them that we've swiped them into a Lancashire project. So in essence, just to give you a bit of an intro, our vision, very wordy. I apologise, my presentation is quite wordy, and largely because it's about governance. But yeah, we're looking to deliver large-scale projects, so large-scale ecological regeneration or restoration through habitat and land use and management change at that catchment level, delivering to local communities particularly, but also strategically addressing the climate and biodiversity crises. But the eco, we've tried to grab as both the ecological restoration, but also economic restoration, because as Digby, described, farmers are currently about to lose quite a significant income stream. So we were trying to do something quite challenging in so much as that we're trying to concurrently solve the problems that are focused by large-scale projects. So having a real strategic focus at scale, at fast pace, unpicking many of the uncertainties that are associated with natural capital and ecosystem service markets and non-market services, and also connecting the landowners, benefactors and funders. But also addressing the kind of unsustainable process that we've come across to achieve that vision, many of which both the previous speakers have sort of touched on. But what we were exploring is how you can do that through am I sharing the wrong? Oh, sorry. Through cooperative and governance development. So co-designing the governance from the outset rather than later in the project. So we focused on 3 areas within the Ribble catchment. So this is Ribble catchment, which starts off in the Yorkshire Dales at Ribblehead and then flows out to the west coast at Lytham, but also takes in the Douglas catchment around Wigan and Skelmersdale. Our 3 farm groups were Chipping and Long Preston and in and around Accrington. So they're places where we had existing farm groups that we've been working with for the best part of a decade. But as the projects evolved, we've also started to look at 3 other potential locations where we have establishing farm groups. So first job that we did last year was to start looking at the legal structure. So we accepted that we wanted to do a cooperative, but then a cooperative can be underpinned by differing legal entities. And obviously Digby talked about a company limited or a limited company. I can't remember if it was by shares or guarantee. But we also looked at CICs, cooperative societies and benefit. I can't remember what BENCON stands for, but we have largely landed on co-op societies being the most appropriate for what we were trying to achieve. And what was particularly valuable around that was the ability to attract grants being slightly higher than the limited companies. So the benefits of co-ops, they are designed by their members or certainly through co-op society. So that makes them flexible and very adaptable. And that helps us to manage the commitment level variation. So in a lot of the stakeholder workshops with our farm groups, there were some farmers happy to sign up for 30-year agreements, some who didn't want to go beyond 5 years, and we can start to manage that. They're easier because of their flexibility and adaptability to accommodate non-market services. So where we might be looking at ESG rather than say BNG or carbon credit sales. And we felt that it provides the appropriate level of ability to manage for change and uncertainty. They also protect their members in some instances from each other, but also from funders and investors. And really importantly to us, they're really place-based. So, you know, the cooperatives were born in the north, certainly in the northwest around Manchester, and it was around solving community collective problem through localism and collective endeavour. And so that place-based element was really important. And Digby touched on that control and decision making being focused on the members, and sort of negotiating how you achieve that through the members to support them. And that I'll come back to has been quite a challenging process, and we're not at the end yet. It can appoint a member to act on its behalf. So we've been looking at multi-stakeholder membership, where Ribble Trust might become a member of the cooperative, or a bit like Digby, they can appoint an independent to manage the cooperative or the operational activities. And that's really important because it's a single point of contact for buyers and funders, which with our workshops with some of our local businesses, which are both the small all the way through to the likes of BAE Systems and Heidelberg Materials, that single place to go to is really important. They don't want to try and have 100 different contracts with 100 different farmers to service their needs. And also, just in general, this sort of grouping, I suppose, but easier to achieve through the cooperative model was the economies of scale. So that ability to group projects for Woodland Carbon Code, which reduces the cost base, but also the costs around single sales and funding agreements for multiple projects. So, bit on the journey and challenges in developing the benefits. Yeah. There is a lot of discussion. We did a lot of surveys, workshops, and a lot of negotiation, and that all comes with a significant upfront cost, which, you know, could make the establishment of further cooperatives quite challenging, possibly not sustainable. What it doesn't cover is that principal challenge of taking an investable concept through to an investable project or proposition. So we're trying to run the governance at the same time as that project development, and that's really, really difficult, and we haven't quite sort of solved that yet. It's really innovative, and what we found, so the multi-stakeholder element of it is that a lot of the corporates are kind of going, yeah, no, we don't get this. What's the offer? What are we getting for our money? Whereas the point of the multi-stakeholder cooperative is that they are part of that cooperative inputting into its governance and its direction. So we've kind of felt that actually they're probably more likely to go for simple transactional and sit outside the cooperative, which might steer us more to Digby's model, which is really kind of around being a seller rather than a multi-stakeholder. But also some of the feedback from the farmers in terms of retaining control, we found that might be the case, but that might change. Some of the local authorities might particularly want to have more involvement. Some of the corporates who want to achieve ESG, so non-market based things that aren't quantified and easy to transact on, they might want more input. Yeah, farmers absolutely appreciate more control and transparency. And what we found definitely is where we had communities of place. So our Long Preston group, they are a social group already. We've progressed things much faster than in some of the other areas where the farmers aren't an automatic social group. So I think in sort of coming to a bit of a summary, co-ops are not a panacea, but they can be a very useful model in some instances. And for a cooperative, the governance work has to start earlier than step 6, but that in itself creates a problem in identifying if it's the right governance for your project. So there's a bit of a sort of catch-22 there, and that's it from me. Thank you.
Brilliant. Thank you so much, Jack. That's yeah, I think this work on cooperatives is hugely complex, as you say, but it seems that there's been a lot of great learning from your work. So I guess my first question is, one of the benefits that you say cooperatives could offer is being reactive and adaptive compared to other structures. So I know you gave those kind of sub-bullet points, but would you be able to give a practical example of how that kind of reactivity can play out?
Really sort of, I suppose, basic one is that where we're looking at now having the kind of project pipeline, and some farmers who are willing to kind of habitat bank versus those who are waiting until the sale's made. If we're operating more in the kind of ESG non-market goods space, a farmer might sign up and then sort of 5 years down the line into a 15-year contract suddenly have to sell the farm and step out of the project. Well, we can then use the cooperative model to step in and take one of our projects in the pipeline to insert back in the way that we would then have set up that sort of sales agreement in those internal, and then there would be, a bit like Digby was describing on some of the rules around how you do fair exit and stuff, the financial mechanism to deal with that. Whereas in kind of a more contractual one-to-one, if someone exits the agreement, it can all get very complicated, and the outcome's lost.
I see. That is definitely an advantage. I know exit strategies can be a huge issue for some projects in relation to external landholders. So that's really good to know. And then my follow-on question from that, I think, would be around, as you say, the contracts and legal agreements. And if it's not a one-to-one contract with each farmer or landholder, what is the sort of contract setup, or what's been your process for exploring contracts in relation to this particular governance structure?
Well, I'm not the expert in this field, I must admit, but what we've been looking at is the rules around membership being largely what defines how that internal distribution of funds goes. Again, as we saw a bit from Digby, and then our sale, and so there may be some legal agreements in there as opposed to traditional contracts. I still try and get a solicitor to define the difference, and they don't give me a clear answer, but the legal agreements are more flexible and allow for more adaptability, shall we say. But we'd be looking to apply those externally as well, so that in the instance I gave, that we have to swap in essentially a farmer for a historic sale, that's possible and achievable. So it's just that little bit less rigid.
Okay, really interesting. Yeah, I'd love to write a case study on that within the toolkit, because establishing legal contracts or legal agreements is step 8. But you do, as with the general toolkit, there is a lot of crossover in terms of one milestone affecting the other and jumping between different milestones on the journey. So yeah, that was fantastic. Thank you so much, Jack. And thanks to all of our speakers for giving an overview of the governance structures of your projects and your learnings. And I see now that we've had quite a few questions, and we'll open now to general Q&A. So yes, please do use the Q&A chat, the Q&A function, the chat, if you prefer just typing your questions in the chat, or you could even raise your hand and speak directly. But yeah, no, I see we've got quite a few answered questions in the Q&A, but for the sake of the recording, I think it might be good to read some of these out. So the first question from Sally was, what were the Plymouth City Council's perceptions of risk in relation to their model? And Chris, I wonder, I know you've helpfully typed out the answer, but I wonder if you could say a bit more about that.
Yeah, sure, Phoebe, thank you. Yeah, sorry, I've pushed return in the chat, so it's a bit garbled my response, but yeah, 2 main ones I think I'd highlight. I think there was one which is potentially not applicable across all local authorities, but there was a lot of risk identified around, once we'd landed on the fact that an arm's length company and setting that up was kind of from a delivery of biodiversity net gain provision was the right option to take. There was a whole piece of work which we had to do then around the accountability, transparency of decision making around that. So that links back to kind of any local context around families of companies. So Plymouth, that was quite high on the agenda in terms of kind of ensuring that kind of decision making was done in the right manner. Hence, we had to go through like scrutiny committees and kind of do work both within officer level, but also with members as well, councillors, and yeah, making sure that was kind of all covered off. And then the second kind of main risk, which was kind of highlighted regularly, was around the financial risk. So if we're setting up a group of companies in this way, where does that financial risk sit, and how does that kind of link back to PCC, particularly if we're looking at raising external investment. So that's all covered off through the kind of Articles of Association which we've set up, and particularly the member rep role which Plymouth City Council has as the effectively the owning member of the company limited by guarantee.
Brilliant, thank you, Chris. The second question was from Paula, and this is for you, Digby. I think you've also answered in the chat, but 60 out of 140,000 hectares is an impressive percentage. What is the smallest end of the coverage you think would make such a farmers group viable?
Yeah, so it's sort of really difficult to say because it's very much dependent on the area. I think, like Jack mentioned in his speech, was around existing groups in the area. So very much the Environmental Farmers Group is built off the back of these clusters in this core area. But when we're setting up new groups, we have sort of a small group of farmers generally come to us and say, we want to set something up here. They form a sort of a steering group, completely informal steering group in that area, and drive all the agenda. And then the central sort of function provides all the administration, facilitation of meetings, etc. And then they drive through members' meetings in those local areas, onboarding from farmers. So in short, I don't think there's no minimum. What we're generally seeing is probably between 25 to 50,000 hectares, 50 to 100 farmers before you set up a group in an area, really.
Brilliant.
If I might just add, I think it ultimately, not surprisingly, comes back to money. Is what is the value that any group of farmers of any size can provide in terms of ecosystem services and their willingness to pay. So, if they've got a low willingness to pay for support from ourselves or Digby, then the group's got to grow. That being said, if their willingness to pay might increase if we can demonstrate high returns from marginal amounts or low cost interventions from their land. So I don't think, there is a minimum size, but you have to be, start small and then develop it out to see just what can be achieved before formalizing it into something that you would take forward.
That's an excellent point, Jack. Thank you. And actually, building on that, Digby, I know that EFG has recently completed its first sale. Really exciting, and in the interest of learning from the first smaller project and then scaling it, from this sale, did you have any interesting learnings in terms of the governance, such as things that you hadn't thought of before, or things that needs to be a bit more developed, or basically, how was the experience of the first sale?
Yeah, so essentially, just for context, so we've completed one trade at the moment, which is a nutrient trade in our area down south. And we have about 17, a pipeline of 17 other trades that we're working on at the moment as a team. And so stuff has come out of the woodwork from going through the process on all of these. So firstly, for us, managing equalisation and how that's very distributed at what time of year, does it go out with the membership subscriptions, etc. But just to outline with that first trade, so it was £1 million trade. That means that a farmer is getting £880,000, and then the members of the EFG between them are taking a share of the £90,000, if my maths is correct, and that equates to just over £3 per hectare per member, £3 per hectare across the members. So it pays back 3 years of subscription fees just like that. But yes, in terms of the trade allocation policy has come out, for example, of some of the pipeline of trades that we've had. So how do you fairly distribute things to members?
Brilliant, fantastic. Well, that's great news. And yeah, I hear you when you say stuff coming out of the woodwork. I think that's unavoidable to a certain degree when it comes to project development.
I think that's a key part of it is growing a business, isn't it? Is you do it and then you learn from it, but doing it's important.
Yeah, brilliant. Well, yeah, thank you, Digby. That's great. And I've got another question here for you, actually, on from Sally again on any EFG governance challenges where some farmers not signing up to an action may compromise positive impacts of farmers who have signed up to an activity in relation to water quality and biodiversity.
Yeah, I think this is a fantastic question, and it does get raised a bit. So we had a member at our members meeting a couple of weeks ago. We had a farmer member who said that he'll only join the EFG if the EFG makes sure that all housing developments have solar panels and rainwater catchment tanks on every single new house. And so sort of farmers take the EFG to mean their own thing in many cases. So I think we have to be very clear on the scope of what EFG is for. And of course, it's delivering those environmental targets, but it's also for trading on individual trades. So at low level, we're looking at individual trades and the environmental gain from those individual trades. And then from a high level, it's looking at how we combine the change that's going on within the water catchment and meet and beat government targets and local targets on delivering those. So we hope to have such a diverse mix of farmers, which we do have already, which means that it shouldn't compromise the overall direction of the group. And every member is signing up to those objectives as they join the group as well.
Yeah, really interesting. Sounds like a very environmentally conscious farmer. Jack, do you have anything to add to that? Because I know that you added in the typed answer.
Yeah, I maybe sort of misunderstood the question ever so slightly there, but there was this degree of the cooperative shouldn't be making commitments on behalf of the farmers. Our approach has been the farmers tell us what they're willing to commit to, and then that's what we will commit them to, and not sort of, so in effect, a farmer who doesn't want to sign up to something, well, that's fine, you know, we haven't committed you to do that. It makes it very difficult, so the question is entirely valid in so much as not so long ago we were approached for about 40,000 tons of carbon, and you know, I sort of went to some of the farmers and said, there is 40,000 tons worth of carbon we can achieve here, but you all have to sign up, and you know, 2/3 of them would and the others wouldn't, and so that was it, done. You know, the sale was off, and that's how you've got to operate. It's quite challenging at times, but it is important.
Yeah, no, that's really interesting. Actually, Chris, I'm wondering, not to put you on the spot, but as you're a council, this question of, you know, broadening the scope and people approaching you for to push the project to deliver beyond its sort of mission, because people approach councils for all types of things in relation to environmental benefits and impact. So do you consider this a risk when going forward with the project, when it's delivering on benefits for people to come out of the woodwork and say, and you know, push for things beyond the trades?
Yeah, I think it is something acutely aware. I think partly that's around kind of initially having really clear sort of vision, kind of articulated and communicated to people like what it is we are trying to deliver against. You know, we're trying to kind of start small and grow, and I think, yeah, to be kind of relating that back to that, is effectively business development, isn't it, activity which we're kind of working on here. So we've got to be really clear from the outset, and yeah, certainly we also need to manage that kind of element, as I said, as a local authority, from the fact that local authorities wear different hats. So that's a piece of work we're doing at the moment, into really defining clearly kind of where the role of our Habitat Bank sits as a kind of arm's length company, but also the relationship between to the local planning authority, which that Habitat Bank is going to have an interrelationship with, and kind of making sure that people are really clear kind of on glass walls and kind of everything that exists there, so that people are clear when they're coming to which part of the council they may come to, because our Habitat Bank will be effectively delivered by the council co, will be contracted effectively in the same way that others have described. You know, it's the Habitat Bank is a shell company with a management service agreement back to our PCC teams to deliver the interventions on sites. So yeah, we need to be really clear at setting that out and communicating that really clearly. However, you know, there's definitely, you know, growth potential in terms of bringing others on board into that kind of bigger model, which we talked about, but that will be kind of like, yeah, a little bit down the road, medium term.
No, an exciting opportunity. No, thank you, Chris. Yeah, so just maybe time for one or two more questions. And Sally, you've asked another great one for Jack, who again, I see Jack's helpfully typed out the answer, but I'll say it here again. Could Jack say a bit more about corporate skepticism in relation to the cooperative model?
Yeah, so through the multi-stakeholder member model, your investors, your funders, your buyers could potentially become members of the cooperative, and because we were going for a very local or localism based model, we really wanted some of the corporates to take a proactive model, membership in the model. And it was just so kind of innovative to them. Wait, what? No, this isn't just a sale. You know, we just want this carbon, and we want to pay a fixed amount. We don't want this kind of ongoing involvement. They were quite skeptical of the whole kind of thing. So hence we've been now looking more at the kind of like seller cooperative, but potentially leaving the door open for conversion into a multi-stakeholder in the future. But you know, we had the Booths, the sort of northern supermarket chain, and they showed more interest, but that's because they themselves have quite a localism approach. But they were kind of like, look, we're so early in our journey in terms of climate change, net zero, and that kind of thing, that actually at this point it's too much. We just want to buy carbon when we need it, or BNG when we need it. So, but I think some of that will change, and certainly BAE have quite a high focus. I think it depends on the services as well. So where they're trying to deliver some ESG outcomes, they might show more willing. But then when we're talking to them about carbon and BNG, that's much more transactional, and they're actually two different teams. So yeah, I think as we can show some examples of it working, people will become more comfortable with the model.
Brilliant. Yeah, no, thank you for that. And once again, a great question on engaging corporate stakeholders and how they can be very complex, but also want a very simple transactional approach, and how you shift them away from that. Brilliant. Yes, I see we've got 2 minutes left, maybe time for one more question. Digby, are you able to put BNG through your scheme? This attendee was wondering how the requirements of BNG for the clear link between developer payment and on the ground delivery would be impacted by some of the money going elsewhere.
I struggle to know how to answer this question in particular. So we have a number of developers who have approached us about BNG, for example, and really the key points about that are that we're going to, essentially for the Environment Farmers Group, everything is between the farmer and the developer. So the Environment Farmers Group is only purely a facilitator. In regards to the location within the area, so each farmer sits, from an Environment Farmers Group, sits within the water catchment, or the equalisation cell as we call it, so they equalise within that area. But in terms of the specific obligation they have to that biodiversity obligation, then of course they will be within the relevant local planning authority and delivering it within that area. So in terms of associating a member with that development, if it comes to us as Environment Farmers Group, we would look to find the closest member who wants to deliver a BNG sort of service over their land. I don't know if that answers the question at all, but it's
no, that was great. And I think it is very tricky as more BNG legislation and policy is coming out. I know that's a key risk for projects looking to deliver BNG, about how to operate and the fine print of those agreements. So thank you so much, Digby. With that, I think we're bang on the hour. So there's nothing left for me to do except to thank our fantastic speakers for sharing about their projects and their governance learnings. I think this is a really great webinar, and I'm looking forward to uploading the recording and circulating this to the wider NERF community. And so thank you to our speakers for sharing, and of course thank you to our attendees also for posing such great questions. The next webinar is on engaging investors on the 24th of July. So I've just posted the registration link in the chat. And I've also got, for those who haven't seen the request from Alison, I also, the GFI Hive has also posted a natural capital project directory with details of all the NERF projects, which I'm hoping people have seen the request to review content, but if you haven't, I'll post a link in the chat now. So yeah, just a bit of admin before we wrap up. And so thanks for everyone for joining us on this Lunch and Learn, and I hope everyone has a great day.
Thanks very much, Phoebe.
Thanks all.
Thanks. Bye.